the Small Business Finance Insights podcast, created for the lenders, intermediaries, and funding sources who power America's small businesses. Brought to you by the combined 50-plus years of commercial finance publishing expertise behind Monitor and ABF Journal. We bring you straight talk, actionable insights, and real stories from the front lines of business lending. Today, we're talking with Terry Luker, founding member of the Commercial Loan Broker Association, about what's shifting in the lending market in 2025 and what brokers need to do to not just survive, but thrive. From the impact of AI and government policy to practical strategies for building stronger borrower-lender relationships, this episode is packed with valuable insights for anyone working in commercial finance today. Hi, everyone. I'm Rita Garwood, Editor-in-Chief of Small Business Finance Insights, Monitor, and ABF Journal. Joining me on the podcast today is Terry Luker. Terry is one of the founding members of the Commercial Loan Broker Association. Terry, thanks for being on the podcast. I'm excited to talk with you today.
Hey, Rita, thanks for having us. We appreciate the opportunity to visit with you today.
So just to start us off, can you give us an overview of how you see the market for lenders and brokers shaping up so far this year?
Yeah, 2025 has started out to be a very interesting year. We're seeing some lenders out there that are, still doing deals and still wanting to do business, but they're really, really particular about the deals that they're looking to do. They're not deals that probably a few years back would have been easy to get done. They're not as easy. I mean, the borrowers have to be, a very experienced borrower. They have to have liquidity. We're hearing that all the time from all of our lenders now. Well, what kind of liquidity does the borrower have? So you have to know where those deals are available, and then you've got to go and make sure that you are where those lenders are available, and make sure you're going and you've got the things in your deal that the lender's looking for.
So given that tougher market that we're in right now, what are you hearing as far as like the biggest challenges that brokers and lenders are facing today?
I think one of the biggest challenges that brokers face, we'll start with the broker, is an uneducated borrower. And too many times brokers are, instead of trying to spend the time with their borrower, educating the borrower about what's going on in the market and what they're seeing in lending and things like that, some of them are becoming order takers instead of really being commercial loan brokers. And here's what I mean by that. The borrower says, I want a 6.25% interest rate on a bridge loan. Well, it's not possible. It's not out there. That market is just not there, for that. And so, they don't take the time to educate that borrower that, look, we're not realistically going to get a 6.25% interest rate on a 3-year bridge loan. It's not going to happen. And instead, they're just wanting to submit it to lenders, and then the lender will look at it and go, they're wanting a 6.25% rate. That's 3 points below where we're going to be, so why are you sending me this deal? And so the lender gets frustrated because on the lender side, they're seeing a lot of bad deals out there right now. They're seeing deals that aren't penciling, that don't debt service. I was talking to a lender just this morning. We got a really nice deal for them, but it's got it's mandatory, it can't be, they're not going to make an exception on it. The deal in this particular category has to have a 1.25 debt service coverage ratio. And if it doesn't have it, they're not interested in doing the deal. And so when you try to explain that to a broker who then tries to explain it to his borrower, they say, well, I don't understand, in past times a 1.15, was good, or a 1.20 was good. And you try to start arguing with the lender, the broker's wasting their time. So that's the biggest thing we see, is the education that the broker is lacking on what's really going on in the marketplace and what they really can get funded, and so it does cause and create frustration with lenders, to a point to where there are lenders, and we're a private lender as well through our Commercial Capital Bidco company. They're just brokers that when you see their email or you see their phone pop up, you go, oh no, another deal. I'm going to have to, tell him why it's not a deal, or, try to help him, instead of those brokers going out there and learning what's in the marketplace and what's going on so they can, get their deals funded and really, really be an advocate for their borrower and someone that can provide, true help to their borrowers. So that's kind of what we're seeing out there right now.
Yeah. So you talked about interest rates already. in addition to interest rates, tariffs is something that everybody's talking about. Are you seeing that impact deal flow at all from your perspective?
Not really impact deal flow that we're seeing. We have heard, and we've seen one deal that was going to be impacted by tariffs because of their cost of goods, going up. Okay, that's inevitable. You're going to see that in some deals, but we're not seeing that a lot. A lot of our borrowers are in the commercial real estate industry, or we're doing, SBA loans, 7A and 504 with them. We're seeing, a lot of that. So we really haven't seen it impact it as much as I think people thought that it was going to impact it. So far that's been good. We haven't seen it a lot.
So going back to what you said about the brokers, needing to give an education to their client, on the flip side of that is brokers kind of understanding the lenders and who's lending and who's not and what their parameters are. How can brokers stay on top of information like that?
Well, I said, pardon me, I'm getting a little bit of a cold there. I said, years back, and when we started our company 13 years ago, Ken Collins and I built ACS on the premise that we were going to have to build our own lender network. Okay. And that's what we did. We went out and we built our own lender network, and we knew where those lenders were because we spoke to those lenders every week. If we missed a lender that week, we didn't get in touch with them. We made sure to talk to them that following week. So we stayed on top of what they were looking for and what type of deal flow they were looking for. The brokers that don't have their own lending network, quite frankly, they need to be a part of our association, the Commercial Loan Brokers Association. One of the benefits of membership into the Commercial Loan Broker Association is the fact that there is a lender guide in our portal that they can, once they become a member, they can click into that portal and they've got access to that lender guide, and they can see specifically, and we keep that current, of what that lender's looking for and what type of lending that lender's wanting to do. There's 2 pages, on each lender that's in that lender guide. So I think that's important as a community to know what lenders are lending and what lenders are not, and to stay on top of that, because in the past, we haven't seen it as much in the last 12 months, but in the past, we've seen lenders come and go. The old Cherrywood, I remember we did a lot of business with them, and they're gone. They've been gone for a while now. So you've got to know which lenders are out there, which lenders are lending, and brokers need to have a community, I think, that they're involved in, unless they're going to build it on their own. And that takes time, building your lender base on your own and staying on top of what those lenders want. How you do that, if it's your own lending, you're going to have to stay in communication with those lenders, and you should anyway, so that you can know what they're looking for.
Yeah, building that relationship and maintaining it is so important.
I think sometimes brokers forget that they have to have multiple relationships to be successful. They have to build a relationship. We talked about this in the webinar that we did, recently on mastering client success. And one of those things was build lasting relationships, build long-term relationships with your borrower. Don't be a one and done. Don't just do one deal, because then you got to go look for more clients. Whereas if you'll build a lasting relationship, for those clients, when they need to do something again, they're going to call you, because they remember you, you've stayed in touch with them, you followed up. Those are the things you need to do. You got to do the same thing with your lenders. And so I wish brokers were better at that. And I hope as an industry that we educate ourselves to get better at that, in building relationships across all avenues.
It's so important.
Mm.
So I wanted to go back to something that you said about, brokers just trying to chase a certain rate or something like that and getting frustrated about the experience that they're having. What kind of
Mhm.
advice would you give to them about
I
the
think
market
bro
conditions?
I think brokers that are chasing rate haven't spent enough time getting to know what's most important for their borrower. Because I think if you sit down, and this is why we have, a call with every one of our borrowers, with our borrowers that are direct with us, or our clients that are direct with us, we have face-to-face meetings with them, whether I've got to fly or Jeff's got to fly, whatever we have to do. We want to know what's important to that borrower. And as a lender, lenders want to know what's important to that borrower. If the most important aspect of that deal is rate, then that's not relationship. Okay. And if they're just looking for the best rate, as soon as the rate environment changes, they're going to leave that lender and go find another lender, if they're able to do that. Okay. And so we're trying to find out with our borrowers, and we love our brokers to know this, is what's the most important thing to the borrower? Is it getting the deal done? Is it getting to a specific payment? So if we can't get to the rate, maybe we can get a little bit better term, or maybe we can get a little bit better amortization, on the deal. But just strictly chasing rate tells me that the broker hasn't spent enough time with their borrower and trying to understand what the borrower's really long-term goals are.
Definitely good advice. So when you're looking out at the market right now, are there specific types of deals that you see lenders more comfortable funding right now?
Deals that have liquidity. you know, uh, I say this kiddingly. I say banks really want to loan money to people that really don't need to borrow money.
Mhm.
Um, that's not true. There are, and I say that, tongue in cheek, because there are a lot of great banks out there, and there are a lot of great lenders out there that are struggling, through this climate, just like the rest of us are. Okay. And they're looking for great deals that they feel are going to have a great chance to perform. That's really all a lender wants to know is, what are the odds that this deal can perform, that this borrower can perform like they believe they can, and am I willing to bet on that? Because that's what a lender's betting on. Okay, is that yes, this borrower can perform. So I think that hotels are still tough. We've got a hotel deal that's a very large hotel, the best borrower you could ever ask for. Okay, their financials are one of the wealthiest families in all of Tennessee. Okay, and we're struggling to lay that deal down now. We think we've got the solution done for it now, and we're excited about that. But that deal shouldn't have taken us as long as it did. But it's a hotel, and so when you talk to your lender, the lender says, I don't want to know about your borrower. It's a hotel. We're not interested, and so you've got that. So I think that's the biggest thing is you're still seeing challenges in the hospitality arena if you can't do them through the government's 504 program or the 7A program. Those deals are getting done. Those deals are limited financially. This deal's, a very, very large hotel. It's a full service hotel with a $78 million valuation. So, those are a little bit tougher, and you can't do those deals through SBA. Office is still a struggle, with a lot of lenders. They're still just, on a hold on office lending. They just don't like it. They're just not comfortable with it yet. But everything else, multifamily in certain segments is a little bit saturated, but in the segments that it's not, people still love multifamily. Um, the properties that are tenant, that are owner occupied, they love those deals because the owner's putting his business in that deal. He's going to run his business out of that deal. So they like those deals a lot. And so we're seeing a lot of success with those. And, people call us all the time about strip centers and properties that they've built for just investment. And that's great if they have credit tenants. A big auto parts company that's publicly traded, or, one of the merchant stores, that's publicly traded. Those are easy. I don't want to say easy, but those are easier to get financing done on them as long as they meet all the other parameters. The 125 debt service coverage, the lease being at least 10 years, those type of things. But we're seeing a lot of success in that arena, in getting those done.
So I'm going to switch over back to the CLBA and just talk about, the benefits that you're offering for your members. You talked about that interface where brokers can log in and see all the different lenders and the parameters that they have. In what other ways is the association supporting brokers in navigating the current environment?
Well, one of the things that we did last week, and it's something that I'm not really comfortable with, and I don't like to put my own company in crosshairs, but I have a responsibility to our broker community as one of the founders of the Commercial Loan Broker Association. We wrote the president about the SBA changes they're making to 7A. They're not good for business owners. And if they're not good for business owners, it's not good for brokers. And I represent the broker community, so I've got to take a stand on that. And sometimes that can put your company in the crosshairs of the government. But the bottom line is that so we wrote the president, we wrote the Madam Secretary Kelly Loeffler. I wrote the senators here from Tennessee because this is where we're home based out of. I've already heard back from Senator Haggerty's office. He's very much an advocate. Senator Haggerty is a very big advocate, for small business owners and businesses in general. And I certainly appreciate his support, from his office coming right away, to our office and meeting with us and sitting down and talk to us. Um, so that's one of the things we do that benefits brokers is that, we stand, and take a stand to try to help our community when we see something that's going to be detrimental to our community. And the changes in the 7A program are detrimental to our community. Now, there's three things involved, two things that we wrote about. One of them is the business ownership financing. You won't be able to do that through 7A anymore, the way that they've structured it currently. So that needs to be fixed. The other that we really took an issue with is the MCA refinancing into SBA. You can no longer, as of June 1st, you can't take someone's debt that they have in MCA, merchant cash advances, and refinance that into an SBA loan. The argument from the SBA is that it's not a loan, it's an advance on future revenue. They're right. It is an advance on future revenue, but it's still an obligation that the small business owner has, and so, we need to be able to restructure that debt to more favorable terms for these small business owners. And whether you're a fan of MCAs or not a fan of MCAs doesn't really matter. A business owner is going to do what they have to do to survive. And sometimes they have to take those MCA advances to meet a payroll, or whatever issue that they may have that's staring them in the face. And so we need to have an avenue for that. And that's why we took a stand against it and said that, hey, we need some help here. You guys need to take a better look at this. We've already been told by a couple of our SBA lenders, well, here's the workaround. Well, we shouldn't have to come up with a workaround. We should be able to understand that it is an obligation that the owner has, and we need to be able to take care of that. So that's one of the areas that we, support our brokers. The other area is making sure that the documents that we're using have all been vetted. So in our portal for our members, there's also a document library where you can go out and you can get a finder's agreement, to engage your client. You can get credit applications for different lenders that are members of the CLBA that are, already out there. A standard PFS document, a personal financial statement document is out there and available. So we're just trying to make our industry to where it's kind of, I don't want to say a cookie cutter, but it's to where the documents have all been vetted. They're at least vetted through our attorneys here in the state of Tennessee. And I tell the brokers all the time, take the document, have your attorney in your state review it, and make sure that it conforms to your state law as well. So those are the things that we're trying to do, along with the AI enhancements that we are undertaking right now through the Connect portal that we use for our marketplace. So it's a big advantage, we think, for brokers. And then to also be a clearinghouse. I get calls all the time and they say, hey, Terry, I've got this deal and I just don't know what to do with it now that, the other organization that went out is gone. Can you help me? I get probably 4 or 5 emails a week, to those effect. And we always try to jump in and help and say, hey, if this was our deal, here's where we would look at trying to do this deal, and make sure it's structured correctly and all. So just to be a clearinghouse for brokers, we want that community for them.
So you mentioned that there's a portal for members, and you talked about a couple things that are available there. Can you kind of just give an overview of everything that's available to members in that portal?
Like I said, it's got the lender guide is huge, where it's kept current. We make sure that we're talking to those lenders on a quarterly basis to make sure that, their information is correct, that the contact point hasn't changed, for our broker community. And that their lending guidelines are still the same. So as they change and evolve, we want to be able to make sure that information is at our brokers' fingertips. We are not releasing that to the community. You're going to have to be a member of CLBA to get access to the lender guide. The same thing with, our paid for conferences. You're going to see us doing more and more conferences, for our community. And as we do those, our members are going to get a reduced pricing, into those conferences, for that education and that benefit. We want to really be focused and diligent about educating our community and staying on top of the education ourselves so that we can help with that. Then you've got the document library. You've got the relevant news. Like I think Leah and her team have out on the website now the letters that we wrote, on behalf of our community, challenging the changes that they're making to 7A. Those are out there. So our industry news is out there as well. So we think it's a valuable platform, for that. Videos, training videos, webinars, things like that are all going to be out there, eventually as well. And I think we're starting to upload some of those now. The videos from last year's convention, some of those are out there and available. So that if you want to go and you want to refresh your memory on one of the breakout sessions that we had last year in Orlando at our first one, it'll be out there. So you can go and you can upload it and take a look at it again to make sure, it's right. You need to make sure the information is relevant, because those breakout sessions that were done at that time, all that information was relevant, and our industry is ever evolving. And so the other thing that you'll see us doing out there is keeping our community updated on all the changes that are being made in lending. So.
And you had also mentioned an AI tool that you are starting to work on. Can you tell me a little bit about that? I think the plan is to have it rolled out later this year, you said. How will it help brokers?
So right now Jeff and I last year purchased a large interest, a controlling interest in a company out there called Credit Unity. And Credit Unity is a community platform where brokers load deals up into it. And then on the backside of those deals, there's 300 lenders waiting to see those deals as long as that deal clears their filter. And what we've discovered is it's a lot of manual labor, currently in that right now. And we've got a team that works on that and makes sure that everything's in there, the information's right. And, and sometimes they get pushback from brokers, and we're like, look, we're just trying to get all the information in so we can get you a really good soft quote, and get your deal moving forward. Well, what's going to happen is that, the association is actually going to purchase the system that does that software. It's called Connect. And Connect will then become a part of the association, and you'll be able to access Connect Premium through the CLBA website. And what that means for our broker community is you'll then take a deal, you'll upload it, into the system. And once the AI is complete, and we're targeting a September completion date, for the AI. Once the AI is complete, it will send back to the broker what's really great about their deal, the weaknesses of their deal, the comps in the area that their deal is in, to help them see where they're at in a value perspective. It will then send them back suggestions on how to improve their deal, and it will send them back information on deals like theirs in that same segment that have been approved for funding and what those rates and terms were. So it will be a great, great tool, for the brokers to see, wow, I've got a really weak deal here. I need to make some improvements, or we need to see, what else we can do to make this deal stronger, or to let the broker see, I've got a really strong deal here, and these are the types of terms that my client can expect, and then once that deal goes to a lender, the lender is going to get all of that data and all of that information. They still have to do their own underwriting, but all that information is going to be right at their fingertips, so they can quickly get a soft quote back to the broker, so he can present it to his client, and so we can move, forward towards funding. So we think it's going to be an industry changer. We're really, really excited about it. So
That sounds really exciting. So I wanted to shift gears a little bit and talk about education and training. And I know that in addition to the CLBA, you have an academy as well. How is that academy different from other broker training programs that are out there?
Well, I think, when I graduated school, I went to a broker training school, and I graduated in December of 13. I started our company, Ken and I did, in September of 2013. So we started the company, and then we went to training. Kind of did that backwards a little bit, I guess. When we came out of school, there were three things that Ken and I realized pretty quick that we had to do. One was we had to go find clients. Okay. You can't make any money if you don't have clients that are willing to let you work with them. The second thing that we had to do is we had to go find lenders that would fund those clients' deals, for us. And that's important. The third thing that we had to do is we had to learn to package those deals to the lender. to gather all the documents the lender wanted and put it in a format that they wanted and send it to the lender. Okay. And so that's three major things that we're having to do to start out with. So what I said when we were talking about building our school was, what if we could take away some of those critical steps? Now, I think those are the three critical things that a broker does: find clients, find lenders to fund those clients, and package deals. Okay. What we've done in our academy is that we've taken away two of those things. So if these folks come through our academy and go through our training, okay, then they get access to our credit team. So our credit team, once the student that graduates has the client engaged on a finder's agreement, and we teach that. We teach how to present your finder's agreement and how to get it executed. Once they've done that, they introduce the client to the credit analyst, and the credit analyst takes the deal from there. The credit analyst then works with the client, gathers all the docs, does all the underwriting, presents it to our internal credit committee, and then our team uses the CLBA lenders, okay, and we get that deal funded for the broker. So we're taking away two steps in a three-step critical process that Ken and I had when we first came out of school. So in reality, all the students that graduate our school have to do is go find clients that they can build a strong relationship with. Now, we ask them to work with us for at least a year, after they graduate school. During that year, they can listen. They're on every email. They can listen to every phone call if they choose to. They can understand what the credit analyst is doing, and they may decide, you know what, I can do what the credit analyst is doing. I'm going to go out on my own and do this myself instead of working with these folks. They're going to get access to our lenders because of their membership into the Commercial Loan Brokers Association. And they may decide, I can build those relationships with those lenders too. I'm going to do that on my own. No one's keeping them from doing it all on their own if they want to. What we're doing is we're offering that to them as a service to help them get their footing, get off and running, and then them decide how their business needs to flow. And so I think that's the big difference. And I'll say this. I believe that education is what builds up a society. Okay. I think it's what built America. As we got more education, we got smarter, we got more creative, we built new widgets, if you want. Well, I think that's the one thing that we have a responsibility to do as a Commercial Loan Broker Association is education. And so that's why the Academy was such a vital part about what our vision is for the Commercial Loan Broker Association.
You mentioned that you do webinars. I know that you just did one in spring. What kind of topics did you cover in that, and how did brokers respond to it?
Yeah, so I'm really happy with what the team put together and what we presented in the spring. We called it Mastering Client Success. Okay, is what it was. It was supposed to be an hour. I think it ended up being 2 hours. And we're trying to keep it down to that hour and 45 minutes and no longer. We want to give them a period to ask questions and to do as well at the end of it. But it was the art of commercial loan brokering, and what the things that we talked about were finding clients. Where do you go find clients? Building long-term relationships, balancing technology with the human touch. What's the best way to do that? We went a lot into the finder's agreement, why it's so important, why it protects the broker, why it protects the client, because it lays out what the broker's going to do for the client, and then we talked about the resilient broker, and sometimes you've got to stay focused. I'm different in that I think right now is the best time to be a commercial loan broker, because business owners need us now more than ever. Now, they don't need somebody that's fly by night and flippant and going to want to do one deal and be done. They need a true advocate, a commercial loan broker, that will be there beside them and help them. We have clients in our company that we've worked with for over a decade. For over 10 years, we've kept those clients. Well, we don't do that by mistreating them. We do that by delivering results and being, good to those clients. That's what we're trying to teach the brokers to do. And you're going to see us do that, more and more as far as an education, piece. I think we've got one scheduled for the fall, and the team handles that, and I just kind of do what they tell me to do. But we're really excited about that. In addition to what Scotty D. Berdinas, we call him Scotty D, but what Scotty D does every Tuesday. He does 2 webinars every Tuesday, and so I think that's really important. And those webinars are, people that are sponsors of the CLBA and members of the CLBA. Those, because lenders are becoming members of the CLBA as well. It's not just brokers that are becoming members. We have lenders that are becoming members of the CLBA, and we require that. If you're going to be in our lender guide, you got to be a member of the CLBA. You know, we want you to support what we're trying to do as a community. And so those lenders come on and they do a webinar and they present their lenders. You know, they present their program and what they do and the kind of deals they're looking for. And then they take good Q&As. And I know some of those guys that have done those webinars tell me, Terry, it's so successful. You know, we meet new brokers and it's really successful, you know, and Scotty always has, you know, somewhere between 50 and 60 brokers on every one of those webinars, you know, that are constantly hearing from lenders, you know, and what those lenders are looking for and how to really, you know, get deals funded through them. So we think that's really, really important. It's something that's really missed. And guess what? We don't charge a penny for those. Those are free. You know, every Tuesday, Scotty takes up, and it really takes up his whole day, you know, and then he's spending time planning that and getting it going. And he's such a valuable tool, you know, to the CLBA, and we're so thankful that he's a part of our team. But he does an amazing job of making sure those webinars continue and go, and so we're really excited about that.
That's great. So in addition to the webinars, I know you have your annual conference too. What can attendees expect from this year's conference?
Well, we think, we've been told, you know, and last year, you think about what we did last year, you know, and I still can't give enough credit to this team. In 5 months, they pulled off start to finish an unbelievable convention and expo. And every piece of feedback I got was, wow, it's the best event we've attended. You know, we will be back. And I think our increase in size this year at the new convention place is about 10 or 12 units or 10 or 12 booths that, you know, addition from last year. And I think that's about what Scotty's got left, because everybody that came last year, I think, except one lender is already told us, hey, we're coming back, you know, and so that's, you know, unfortunately, there was one lender that said he didn't get any business out of it, but every other lender that I talked to said, yeah, we got some amazing business out of that convention. That's what it's for. You know, it's for the brokers, you know, and it was such short notice because it was 5 months that there were some brokers that have told me, hey, we didn't get to attend last year because we had already committed to other things and all, but we are coming this year. So we're expecting, you know, somewhere between 300 and 400 brokers to be present, you know, at the convention this year. I know the lender booths will all be sold out. I think we already have plans for overflow, you know, that we're going to have 3 or 4 booths in overflow because of what we're hearing and what we're seeing from people wanting to come and be a part of it. But here's what a broker can expect. World-class breakout sessions that are going to be educational based. Okay, we're not having a breakout session unless it brings value for the broker. And you know, last year I did something different, and everybody said, don't know how that's going to be received. We closed the exhibit hall during the breakout sessions. So if you didn't want to go to the breakout sessions, that's fine, but the exhibit hall is closed. And when I say closed it, we even ran the lenders out. We didn't have anybody in the exhibit hall during the breakout sessions. Well, here's the mistake we made. We didn't have a breakout session for the lenders. Okay. This year we do. So we have a state of lending panel that we do for the brokers in the general session. We're going to have a state of lending panel that's being done for the lenders while everyone else is in a breakout session. So we're going to be talking about what all the lenders are seeing in the industry and how we can work together to be better and those type of things. Instead of being competitors, how can we work together and be better? You know, and so that's what you're going to see. Really excited to have Joe Theismann as the keynote speaker. I think, you know, everybody remembers, you know, the Super Bowl that he won with the Washington Redskins and things like that. What people may not know about Joe Theismann is he's also a heck of a businessman, you know, and he's built an amazing reputation after football, you know, for what he's done. So I'm excited to hear what he did after football, you know, and see what advice that he has for our people. So we're really, really thrilled about that. And one of the things I'm most proud of, and I'm going to say, you know, it was my idea because it means this much to me, is we're having a women's luncheon that is based around women in the CLBA, because I think that's important, and I think that there is some really, really great leadership amongst the ladies that we have in our industry, and I want them to have a place to come together and support each other and be there for each other. And so I'm really, really, really excited about that. In addition to our co-sponsor, Baker Garrington, coming back, and last year they jumped in. I mean, they jumped in with both feet and probably didn't even know what all they were getting. We had, if I'm being transparent with you, Rita, we had positioned them in a really bad segment. They came to give their talk right after the keynote speaker, and Mark Sanborn did an unbelievable job for us, and we had them in the wrong spot. So we fixed that this year. We're having a break after the keynote speaker, so that but they graciously said, "Hey, we understand. We're coming back." And so we're just thrilled that they're coming back to be our co-host, with us, and be our partner with us in that regard. So it's going to be a world-class event. It's the 27th, 28th, and 29th of October down in Orlando again, and we're just really, really excited about it, and hope that people will come. I met the best relationship I have ever had in this industry at a convention just like this. And he and I stayed friends still today, even though he's retired now. And he helped me, he mentored me, and helped me get my business to where it is today. And I'll forever be grateful. And that happened at one of these conventions. Those are the relationships that are available at those conventions on that convention floor. So we're really, really excited about it.
That is really exciting. So what is your long-term vision for the association and the broker community that you support?
You're trying to get me in trouble with my team, aren't you? My vision is education leads to credibility. Okay. So my vision is that we, we educate the commercial loan broker community, and then we certify the commercial loan broker community. So what I want to do is I want a certification program to where when you say I'm a commercial loan broker, it means something. It doesn't mean that you just hung a shingle out and started doing business. It means that you've been through a training program. It means that you do continuous education. It means that you're a member of the CLBA. It means that you have ethics that you follow, and you have, standards that you follow in the way you do your business. That's what I want to do. And my plan is, and I'm putting this out there now, to get the school, really on solid footing. We've had our first class. We graduated 7 students. We got our next class in June. Really excited about that. But I want to take our curriculum, and one of the things we don't talk about a lot, Rita, is we spent a year building the curriculum. This wasn't something that we just flipped together and threw together. We spent a year. Here's what we want our school to look like, building that curriculum before we ever had our first class. We want to build the curriculum, and then we want to go get it certified. You say, well, where are you going to go get it certified? Well, my dream is to have the American Bankers Association take a look at what we're doing and say, wow, yeah, that's something that could work. We let us look at that and let us see if we can help you. And having them put their stamp of approval on it, rather than just the CLBA have the certification program, have an ABA, the American Bankers Association, or some of the state, bankers associations, have that done. There's a school that bankers go to. It's called the Graduate School of Banking. And it's a tough school. I mean, it's 3 years long. You work on projects all year long. And then during the Memorial Day weekend, where everybody else is out partying and having a good time, you're in class for a solid week. Okay. And the things that they do, those are hard. You say, well, how do you know? Because we sent Jeff through it. My son went through the Bankers Bank. Well, when we first applied, the school told us no, that they wouldn't take him because we're not a bank. And then thankfully, the Tennessee Bankers Association, Colin Barrett, stepped up and said, wait a minute, those guys really help community banks, and they're a part of our association. If they want to attend, we'd like you to let them attend. And so the TBA, the Tennessee Bankers Association, was able to help us get Jeff into the Graduate School of Banking. Well, what if all the brokers went through that? What if we all went through some type of training for that? Then I can tell you this, the lenders are going to want to work with people that have that certification behind their name, because they're going to know, They know how to do a global cash flow. They know what DSCR is. They know, the lenders are going to know that there's credibility there. So that's my vision for our industry, is to bring education and to bring accountability and to bring certification, to it. So that's the vision that I have.
It's quite a vision. I like it. So we're almost out of time. I want to wrap up with just a piece of advice. If you could give brokers one piece of advice for the rest of this year, what would it be?
Dig in. Dig in. It's not for the faint of heart. You're going to be, I say this all the time, and people, sometimes people miss it. Think about this. In Major League Baseball, you go to 10 at bats and you fail 7 times. You're in the Hall of Fame. Because if you hit 300 and you have a lasting career, you're going to make it into the Hall of Fame. Okay. So brokers who get told no, well, this must not be a deal, and move on and don't dig in and find out why it's not a deal. See, we don't get mad when a lender says, hey, Terry, this is not a deal. We want them to tell us quickly why it's not a deal. Okay. So we can move on to the next opportunity. And then we like for them to tell us why it doesn't fit their bank. Okay. And that way we learn what? We learn about what their lender, their bank, their lending facility is looking for. So we can put that in our notes. Okay. So I think that's the biggest advice I could give to brokers for 2025 is dig in. It's not going to be easy. There are lots of opportunities out there. Never forget, we're a $1 trillion industry today. Moody's forecasted in December that in 3 years, this industry will be a $3 trillion industry. Okay. So there are going to be brokers out there that are just going to flip through stuff until they find a deal. But the brokers that are willing to dig in and understand what their client's trying to do can find lenders that will fund those deals and help those clients, which then in turn helps that broker continue to build a long-lasting relationship. So I think that's my advice for 2025 is dig in and let's go.
Awesome advice. Well, thank you, Terry, for taking the time to talk with me. It's been great. And looking forward to seeing what you're going to do with the CLBA and everything else that you're doing. Sounds really exciting.
Rita, thank you for the time today. I appreciate it. And let's have a great year.
Yeah, thanks.